Look, a few weeks ago, February 27th, Ethereum put in a death cross, meaning that the 50-day simple moving average dropped below the 200-day simple moving average. Now, death crosses mostly signal future bearish price action, and these post-death cross drops can be particularly brutal. Ethereum has had a few of these, 50%, 80% drops in the past, but the death cross is a bit of a lagging indicator. We've had some where it's only dropped 20% since the last death cross. So what I want to know is, do we have a lot more downside to go, or was the local bottom for Ethereum at $1,750 the actual bottom? Let's try and get a bit of insight here on how things might play out from here moving forward. Let's run through each death cross in Ethereum's history and note how the price has actually reacted in the following weeks and months after these death crosses occurred. We're then going to analyze our current death cross with this historical data in mind and see what, if any, conclusions we can draw here. So, the first death cross. So look, just after the 2017-2018 blow off top in April of 2018, we got our first real death cross. I say first real death cross because there was actually one like 2016, but it was so early in ETH trading history, it's basically irrelevant. Now, from the death cross to the next major bottom, we see that Ethereum dropped 80%. Those are some crazy times, man. All within an 8-month period. Now, the next two death crosses occurred in September 2019 and again in April of 2020. These death crosses hit in the depths of the crypto bear market when most assets were ranging sideways. You'll also notice that these two occurred just 7 months apart. Now, the September 2019 death cross resulted in a 48% price decline over the next 6 months. But the April 2020 death cross actually was a complete damn fake out, as prices from there led to new all-time highs. Pretty interesting, right? Now, the next two death crosses were in August of 21 and January of 22, and they were 5 months apart. Now, the August 2021 death cross was close, but there was a technical print, so we've got to count it, okay? But it was indeed another fake out. It hit during the 2020-2021 mid-bull run dip, and prices went significantly higher from there. However, the January 2022 death cross was a pretty different story. This one hit after the 2021 blow off top, and ETH dropped 64% to the next bottom over the next 5-6 month period. So pretty significant death cross in that example. Now, the next death cross actually occurred in August of 2023. This was during the 2022-2023 bear market, where we're getting a lot of sideways price action. ETH dropped 7% in just over 1 month after it happened, so really not a very big deal, isn't it? Now, the last death cross that we got before our current one, we did have a death cross in the midst of the 2024 action, right? ETH dropped another 20% after this one in just 1 month, and it occurred 6 months before our current one. Now, before we look at our current situation, let's try to summarize the data that we've collected so far. So from Ethereum's first 7 death crosses, what we find here is that when we run the math, there is a 71% chance that when the death cross hits for Ethereum, it results in a further price drop of relative significance. And if there is a drop, a 43% decline over 4 months is the averaging out here. And it's never technically happened like that, but that's the average drop. And one of our fake outs actually occurred during a bear market. The other was during a mid-bull run. Now, we've got that historical context in mind. Let's have a look at our present situation. So I'm going to argue about the bear and the bull cases here, starting with the bears. But before we get into that, if you're trading crypto, you need a great exchange to do it on. You got to check out what the guys over at BitUnix are doing. They've got a crazy deal on right now as well. But before we get into that, just you need to know what BitUnix is. This is one of the exchanges where you can long and short all the big coins in the market. So look, whether you want to trade Bitcoin, Ethereum, Solana, Dogecoin, whatever, they got you covered. And no KYC, no VPN, no bullshit. Basically, click the link down below and you're in. And you can start trading. Doesn't matter where you are in the world, you can use it. Okay? Go check it out. It's a great exchange. I've been using it for a lot of my trading recently. They have great liquidity, large range of coins you can trade. And when you use that link down below, exclusively, you're going to get all kinds of cool bonuses, including a $10 sign-up bonus. You can use as free money to try out the exchange. 20% deposit bonus, meaning you'll get $200 back if you put in $1,000, and up to $2,000 in trading bonuses. So go check it out if you're a trader and you're looking for a great place to be doing your trading. Now let's get back into it. So the macro argument here is that the death cross is the classic post-bull run meltdown. It's all in the cards, baby. Specifically, the bears will argue two things. First, they'd argue that this chart is in general very similar to the end of the 2020-2021 bull run. Both had their two blow-off tops, both had two death crosses that were 5 to 6 months apart. And second, the bears will point to the actual data with regards to our current death cross. Their argument is that if ETH's recent trip to $1,750 was the bottom, then it would have been the fastest post-death cross bottom in history by a long shot, given that it only took 10 days rather than the normal about 4 months. Therefore, the argument goes that the $1,750 target that we hit was not indeed the bottom. It was just the first stop before we go much lower, because we should see a few more months for this descending price action to play itself out. ETH's going to $1,000 or whatever. So those arguments are reasonable arguments for the bears. But what about the bulls? Do the bulls have a case here? Well, the strongest argument is that if the bottom is not already in, then this will be a significant deviation from Ethereum's historical price action. It's the new Nokia, the new Blockbuster, the new whatever technology didn't make it, Yahoo. And that's because our current bottom, $1,750, is already at the bear market prices from just before the 2024 bull run, man. That's insane. So the problem with arguing that this is a classic post-bull run death cross and that we've got a lot more pain ahead of us is that the bottom that we've already printed is in the price range of the last damn bear market. It would mean ETH's really dead. However, the bottom after the post-2021 bull run death cross was well above the bear market lows for that previous cycle. Therefore, the bulls' strongest argument is that our current bull run does have a lot further to go, and that if that's the case, ETH's going to go up with it, because the odds are slim that such a major deviation will play out from here on the charts. So that's kind of where we're at. Now, where am I at on all this? We have the bull case, we have the bear case. You guys know I sold my Ethereum for Solana. There's a lot of reasons for that, not just the death cross, right? But look, at the end of the day, I have to side with the bulls on this one for Ethereum, okay? And being bullish on Ethereum is being bullish on crypto in general, okay? If Ethereum fails here, it's probably going to be bad news bears for any kind of bull market recovery, okay? Because when the bull market goes, ETH's going to go with it. And look, given how low Ethereum's price actually got recently, and given that Bitcoin goes on to make new all-time highs from here, which in my opinion is what's going to happen, then we've probably already seen Ethereum's lowest price for 2025 from this recent death cross. Now, this doesn't mean that ETH is going to rip into new all-time highs. It might not even, or it might just slowly limp up to a depressing new high. But I do think we go higher from here as opposed to seeing prices fall another 20, 30, 40, 50, 80 damn % over the next few months. But that's just me personally. And that's from what I'm seeing and where I think we are in the market cycle. But let me know what you think down below in the comments. Thanks for watching.